Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, October 22nd, 4:46 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the expanded Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at the key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, we are in an uptrend. In fact, we're bullish across the board. Leaders, our short-term trend on the five major indexes, short-term, medium-term, and long-term, all bullish. This is as bullish as we can get. Basically, it means the market winds are blowing in the direction of the bulls, and until evidence to the contrary comes up, we will maintain as much exposure as we can to the market. We're not going to pick tops. We're going to let this run as far as it can run. We'll always have stops in place to lock in gains or cut losses if something's not working. And we are entering into the favorable seasonality period of the year. So things are lined up okay for the bulls. And as of right now, that's the direction we're sticking with. So and you'll see from the charts and the exposure that we have as we get into the video a little bit later. So what just happened today? Major indexes resting near highs. However, NASDAQ 100, a big laggard today, mostly on ad worries off of Snapchat's earnings report last night. They indicated that the Apple iOS security privacy changes that they made earlier this year really impacted their quarter, and Wall Street is expecting that to also hit other ad-related stocks such as Pinterest, Amazon, Google, Facebook, Trade Desk. Those all took big hits today. Apps, APPS. So some weakness across the board there. Continued strength in the NASDAQ 100 out of Netflix and Tesla tempered that sustained weakness, we're 7 days straight up off of the lows, including a follow-through day. So it's time for a little bit of a rest. No significant damage done to leading stocks. We did take a rest on the G5, which is our internal index proxy, the average of 5 growth ETFs that we track. But again, as I said, time for a rest there as we've been very strong, 7 days up. This was the seventh day, and on the seventh day we rested. So everything, as I said, no major damage done. 3 stocks fell off the 21-21 list, more than 3 clamoring for those critical last 3 positions, and you'll see when I go through the charts what made it and what different. So G5 down 0.7%, S&P down 0.1%, NASDAQ 100 down 0.8%, Dow barely negative, mid caps stayed positive and made an all-time high. Russell 2000 down 10%, down 0.2%. So let's get into the market facts and the charts, but first let's get into the lovely faces running Revere Asset Management. If you're interested in active management that gets you out of the way and prevents you from getting beat with the 2008 2x4, which is probably a 4x4. We avoid that. We avoid that because we take a technical look at the market, and when the market goes south, we get out of the way. Think about it. What other area of your life, when things go south, do you not take an active role to correct it? If your service engine soon light comes on, you get your car checked. If you have a hole in your roof, you get it patched. If it's raining outside, you go out with an umbrella. Why should your investments be any different? Wall Street likes to tell you to stay all in all the time, so that's so that they can collect your fees in their funds. We've got a better approach, and give us a shout. We'd love to explain it to you. Dan's the big cheese here. The majority partner, president of the company, is CFA, one of the most knowledgeable financial people I've ever met. Email him, Dan at revereasset.com. This is me on the other end here. I'm the minority partner, senior portfolio manager. I'd love to talk to you about the way we manage our portfolios. You can email me at don@revereasset.com, and our support staff, headed by Muriel, our office manager. She handles all of the onboarding. Tim is our specialist in short-term trends and also our marketing outreach. And our fantastic analyst staff, Alex and Hunter, uh, constantly keeping me updated on what's going on, feeding ideas, coming up with great entry points for various stocks, and we all work very well together. Happy to be working with all these people. You can email any of us, or you can phone 855 Real Wealth. That's 855-732-5932. Let's get into the charts now. First of all, market facts, a quick review. One piece of news today, late morning, Powell was speaking and he made some comments on the taper that set the S&P 500 from all-time highs down to testing the lows of the prior couple of days, but we bounced right there and finished strong. You can see this intraday swoon down to the 45.24 area that corresponded with the lows of the prior couple of days, so that's pretty solid support. The lows of the last 3 days proving to be the first level of support there that we would look for on any pullback, but that would be a very shallow pullback. That's still above the 8 EMA. So we'll continue to face rising rates as a headwind. The dollar has come off a little bit. In fact, it had a failed breakout and broke below its 21-day exponential moving average. Let's look at that chart very quickly. This was a headwind for a while, but proving not to be so much over the last week and a half. And that last week and a half corresponds with the follow-through day and the breakout. So here's the green line, the 21-day exponential moving average. You can see that's rolled over and the dollar is below that. 25.16, here's the breakout level that failed. We're still above the 50-day moving average. So a little bit of a reprieve from the strong dollar, and we'll certainly take advantage of that. Tailwind sentiment and the put-call ratio continue to work in our favor. Bull cases, we want to stay above the 21-day and the 50-day moving average. Let's take a look at those on the S&P 500 very quickly. So you can see here, here was our follow-through day up off the bottom, and then came up right to this 45, 46 level all-time highs and consolidated there today. Very strong move. Wouldn't surprise me to see it digested for a couple more days, maybe pull back to the 8 EMA. And then for the bulls, we want seasonality to take over and carry us higher to new all-time highs. That's the bull case. Worst case, we want to stay above the 21 and the 50-day moving average, which is down around this 44, 45 to 45.50 area. You can see the 21-day crossing through the 50-day. That's a bullish setup there. That's, as I said, right around the 44, 45 to 44.50 area. So any pullback should be contained by those moving averages. That's the bull case. Bear case would be a failed breakout above this follow-through day. That would be a breakdown into the 44.30 area. As you can see here, that's the failed case. So strong sectors today: financials, oils, base metals, and gold, silver, and gold stocks, which we haven't entered yet, but are going through the charts, and they're high at our list to make an entry point. These are also benefiting from the weak dollar. Sectors that were weak today, as I mentioned, the NASDAQ 100 and solar taking a break also. So we're right here near all-time highs, taking a rest. First support level on a pullback would be a significant pullback would be this 44.96 area, the rising 8 EMA. But as I mentioned, the last 3 days pullbacks have been contained by 45.25. So that would be the first step, and that's only 20 points down, so 0.25% down. And then the breakout area was 44.65, and then you've got your 21 and your 50. As I mentioned, we would start to get concerned if we would break back below this 44.30 area, and our bearish line in the sand, where we would become bears 4,300 and then the 200-day moving average down at 41.91, 8.5% down. So there's a review of the S&P 500. Here's the NASDAQ 100. Has not made new highs. Relative strength just really going sideways to down this week as we took this rest on the Snapchat news, but this is a constructive pattern. If it pulls back, I would expect it to hold the 50-day moving average around 370. Dow Jones Industrial Average 356. So we touched new all-time highs and closed above them on the Dow Diamonds anyway. Note the lagging relative strength over the last 2 weeks. That's quite all right, as growth stocks have outperformed over the past 2 weeks. Mid caps, all-time highs. Nothing bearish about that. Small caps. Weakened relative strength this week, just kind of going sideways, tracking with the S&P 500, but this is a constructive chart. It's holding this breakout from this triangle area, and as long as that holds, we're bullish on the small caps also. Any pullback should hold Monday's low that's down around the 223.73 area. So that's a review of the indexes and where we stand. Let's get into some stocks now. First of all, let's talk about what fell off of the 21 over 21 list this week, and we've got 3 of them. Airbnb, the first one, this was a nice setup, but low volume pullback this week, but couldn't hold the 21, pulled back and is sitting on the 200-day moving average here. Still keeping an eye on this one for some strength, but definitely a lack of relative strength over the last week and a half on Airbnb after a nice setup. Maybe just really consolidating this decent move up that it's made over the last 2 months. Next one that dropped, and it really dropped hard, BTU. We got stopped out on our last piece of this one. Took some profits twice on the way up, but our stops got hit, and we honored them when we broke the 50-day moving average. Extreme volatility in coal. Maybe just time for a break. You can see it's made a big run. And finally, Snapchat. The ill-fated Snapchat. Really couldn't make any progress since its last earnings report gap up. This is a failed breakout. Anytime you see a failed breakout, you got to ask yourself why. Granted, the market was pulling in a little bit, but the leaders are making all-time highs now. Snapchat didn't. This is choppy volatility, and it really took a beating today, down 26.5%. And so this is broken right now. We don't bottom fish. So those are the 3 that came off. Let's take a look at what was added and take a look at the entire list. So we've got 12 industry groups, 12 sectors, 18 industry groups. These are in reverse order of how long they've been on the list. If it's flagged in red, it means we own it in-house, because this isn't just a watch list. This is an active list for us and for clients. So let's shrink this a little bit to get the full charts and start going through it. So the first one added a transport stock. Transports have been acting very well. J.B. Hunt broke out on nice volume on its earnings report and has continued higher. Obviously, we've got massive supply chain issues, and trucks are in a big shortage. I retweeted a very interesting thread on somebody from out at one of the California ports, and what's really going on with the trucks. And there were some pretty simple solutions to it. So take a look at that. Let me know if you have any comment on it. So JB Hunt, first stock added. Dutch Brothers, second stock added, and we own this one. Very strong IPO base breakout, nice volume, pulled back near the pivot, and then all-time highs today. Got a small position in this. It's pretty volatile, but this is looking fantastic. Goldman Sachs, the final new addition this week, forming a very nice, putting a handle in to go with this flat base on base pattern. Financials have been acting great with rising interest rates. Nice reaction in volume to Goldman Sachs on its earnings report. We bought it today after this 3-day pullback near the top of its range. Raytheon, continues higher. We own ITA, which is the Aerospace and Defense ETF. Northrop Grumman is also another strong stock that could be on here, but Raytheon is the one we selected for the list. CrowdStrike, we also own this, consolidating near the top of this cup base. Live Nation, a reopening play, continues higher after its breakout from a cup and handle. Earnings coming up in a couple of weeks. Here's Dutch Brothers. Actually, why are we going backwards here? No, Silvergate is the next one. So this initially gapped down on its earnings report and had one close below the 21, but recovered the next day and is consolidating nicely along there, holding the 21. As long as crypto does well, this one will continue to do well. I also considered Coinbase, adding Coinbase on as another crypto play, but so let's call Coinbase number 22 in the 21 over 21 list and see if Silvergate has staying power. Apps Digital Turbine. This was weak today on the scare caused by Snapchat, but still holding above the 21-day moving average, and volume was just average on the day. Net, absolute beast. Any pullback is being bought on this. One of my Fab Five as far as strongest stocks in the market go. Ethereum. This is had a nice pullback and bounced off the 8 EMA today. We're considering taking an entry in this, but for now we'll just stick with Silvergate as our crypto play. Signature Bank bounce off the 21-day on its earnings report and then higher highs within 3 days. That's bullish. Palo Alto Networks, we own this. A little bit of a 4-day consolidation here, right around the 500 area. CBRE is our real estate play in here, making higher highs, reporting earnings next week. Tesla, another one of my what I consider the Fab Five. Great reaction to earnings at all-time highs today. Bill putting in a nice handle here to go with this cup. Earnings in 3 weeks, hanging out around the 300 area. Affirm, we also own this. This is a Fab Five stock too, consolidating around this 150 area. We added a little bit to our position today on this. Ambarella, another Fab Five continues higher, pulled back today off of all-time highs. Devon Energy, one of the strongest of the oil stocks, consolidating around the 40 area. Upstart, this is the fifth of the Fab Five, pulled back. Lighter volume pullback this week, pretty harsh pullback, 60 points off of 400, but bounced right where it needed to today at the 21-day moving average. We added a small piece to this today to increase our size. Datadog continues to trend higher off of this very strong breakout. Mosaic consolidating around the 8 EMA. And I think that's it. That is it. That's 21 over the 21 list. Let's talk about portfolio changes this week. Stopped out of BTU, added back Upstart, added Silvergate, added to our Tesla position, bringing it up to a 5%, added Uranium, URNM ETF. This one, there's also URA, which is more liquid, but I like the construction of the top 10 and URM better, putting in a nice little handle here at the end of this short cup. Talked about adding Goldman Sachs today and added a little bit to Upstart and Affirm. Our adjusted beta is around a 1.9. We came into the week around 1.67, so slight addition in exposure as the week went on, and leading stocks continue to act well. Let's check my notes, and that is going to wrap it. As always, love to hear from you. I'm on Twitter at @Vandenbord. If you're on Twitter, check out that story that I retweeted about what's going on with the ports in Los Angeles. I'd be interested to hear what you think about that. You can email me any feedback, don@revereasset.com, or you can call us 855-REAL-WEALTH. So wrapping up the week ending October 22nd, this is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.